So basically what we are trying to say is that you are not treating real estate in isolation. Whatever is happening in the economy, it has direct impact on real estate value. How you develop, how you buy, how you sell. Do you understand me? So it's important that we know what is happening in the economy where we are doing real estate business. That's the main essence of this training. And please, I want to encourage you. I don't know how many of you listen to economic news. Do you understand me? The world is what? A global village. What is happening in US and Iran now is affecting all of us. It's affecting the whole world. Do you agree? Oil prices have gone up by what? 30% just between Saturday and today. And when oil prices goes up, what happens? Cost of goods and services will go up. Cost of travel will go up, everything. So please, if you are in the real estate sector, you have to know what is happening in the economy around you, particularly the country where you are operating. Okay, so what do we intend to achieve today? That's the training objective. One, we have an overview of the Nigerian real estate market in general. So key economic indicators, we look at inflation and interest rate, exchange rate and currency stability, GDP and employment level, government policies and physical environment, foreign investment trends. Then we summarize and look at strategic implications for everybody. Do you understand? Please, this, in my opinion, is a very important topic and pay serious attention. Okay, so overview of Nigerian real estate market. Real estate is one of Nigeria's most significant investment sectors. Market is driven by population growth, urbanization, and infrastructure development. Economic indicators directly influence property price, demand, and what? Financial options. You are seeing it now. Okay, so the number one economic indicator is inflation. So why are we doing all this? If you are investing or telling somebody to buy property, be sure that the return on investment for that person should be what? Higher than inflation value. Do you understand? Otherwise, it doesn't what? It doesn't make sense. So these are some of the tools you will use to talk as a professional when you are pitching for somebody to buy property from you. When you are telling a client, say, instead of putting your money in bank or investing in a treasury bill or FGM bond, buy property because it hedges against inflation. The person can go deep and begin to ask you what is inflation rate, what is a treasury bill rate. You should be able to explain all this. Do you understand me? That is the main essence of this training. So inflation, high inflation increases construction costs, construction and material costs, reduces purchasing power of buyers and investors. Inflation erodes rental income value over time. Investors often hedge with land or property to preserve value. Nigerian current inflation rate is about 15.2%. That is because they did rebasing and all that. It's now at a 5-year all-time low. That means we have never had it as low as this in the past 5 years. But we all know when they rebased it for some political and other reasons. But that is what it is as at today. So based on these points, can you guys now see that inflation has a major role to play in real estate industry? For us as developers, high inflation rate has been a major problem because you buy cement today. We started with most of our projects that we launched in 2025. We went full stream into the construction phase in 2025, around this time last year. So we started with price of cement at 7,500. As at Saturday, It has even gone up to 10,600. The one we bought 2 weeks ago was 10,500. But now, as I start today, they are even saying they are going to review the price. Can you see the headache that developers go through because of inflation? And then the people you are developing, for the buyers, if inflation rate is high, they won't have money to buy. Abi? Because first of all, somebody have to take care of his basic need. The person will have, what are the basic needs? Food. So, shelter will even come third. Abi? Because if you don't have house, you can talk to your friend, say, oh boy, things are very hard, though. I want to squat with you. Abi? So you start with what? Food. You clothe yourself, then you come to housing. So if inflation is very high, it affects everybody, both the developer, the buyer, and sales executive like you people. Do you understand? So it's a very critical factor that affects how we do real estate business. Okay, so interest rate. High interest rate increases borrowing costs and mortgage repayment, reduces availability and slows demand for housing. Is somebody who chop belleful now that we talk of buying house, abi? So low rates encourage borrowing and stimulate property investment. Central Bank of Nigeria CBN rate policy has direct impact on market liquidity. At the last MPC meeting held on February 24th, 2026, the CBN reduced MPR to 26.5. Okay, please, MPR simply means Central Bank of Nigeria Monetary Policy Rate. So this is the rate at which commercial banks borrow money from central bank. Do you understand? Is the rate, the CBN use this rate to control both the money in the economy and so many things. Do you understand? That is why they are always having MPC meeting, Monetary Policy Committee meeting. That's the meaning of MPC. Do you understand? This also has direct implication because what they are saying is this: commercial banks want to lend money, borrow money from CBN. They will pay 26.5%. So if commercial banks are taking money from CBN at 26.5%, how much will they give to businessmen and women or corporate organizations? Do you understand? 30% will be at the minimum. They will not even give at 30% because they have all their finance costs. The risks are there. Do you understand? Because it's not the person that you borrow, it's not all the people that you gave money that you pay back. Do you understand? So that is why they are going 30, 32, almost 35. Because they have, first of all, they themselves, they are taking risk. They won't just collect money from CBN and come and give you. Abi? They have to make their own profit. And they have to factor in the risk because of non-performing loans. So you find out that interest rate also affects. And again, for us developers, if the rate is high like this, it's a no-go area. And that means what? It limits our capacity to produce more houses. That is why when people begin to talk about affordable housing in Nigeria, I always laugh. The environment is not conducive for affordable housing. Environment where you cannot get land easily as a developer, you cannot get funding easily at even single or 15%. There's no, please, let's forget about affordable housing for now. Do you understand me? So that is interest rate for you. Okay, exchange rate and currency stability. Naira devaluation increases cost of imported building materials. Foreign investors hesitate when currency risk is high. Stable exchange rate promotes investment confidence and increases project costs and delays. When the dollar goes up, everything turns upside down because most of the building material we are using here apart from cement, granite, once you come to finishing, even painting, they produce paint here, but most of the inputs are also imported. So when exchange rate is very, very volatile, the worst thing is not even that it is high, but you cannot predict it. Do you understand me? And when you cannot predict it, it becomes very, very difficult. And everybody now try to cash out on it. I'll give you an example. In my own personal opinion, I don't know why currently price of cement, for example, should still be going up. We're talking of a little bit stability on the exchange rate. At least it has been stable for some time now. Also, petroleum products that we are shouting we are importing diesel, we are importing this, we are now producing in this country. So I don't know why things like all those building material that we get locally should still be going up. It's not only cement. Granite also, we started our project with 5,000 naira per ton. As at today, it's now 8,000. So when what we are basically saying is this: not only that the thing is going up, but when it is, fluctuating, people try to, take advantage of it. Do you understand me? So exchange rate, how stable, what is the current, that's the rate, and how stable it is. It has a long way to affect how we do real estate business. Okay, gross domestic product, GDP growth. Let's go on. So GDP growth signifies overall economic health and real estate demand. A strong GDP correlates with higher disposable income and property investment. Economic downturn reduces consumer spending and real estate transactions. Nigeria's nominal GDP is estimated to be approximately 285 to 334 billion dollars for 2025 to 2026. Do you understand? So what we are trying to say, they use GDP to gauge how healthy the economy of a country is. That is why if you go online, you see countries with the highest GDP. They use it to measure. Another way is to use it. It's a measure of how wealthy a country is. Do you understand me? So please, as I said before, all these things are very, very important. They are things we should know as professionals in the industry. Do you understand? So Nigerian own is growing gradually. There's improvement from what it was. I think this current rate now is about a 4% increase from what it was previously. Okay, so employment and income level. Employment rate determines household purchasing power. Do you agree? Eh? So it's first of all, before somebody begins to talk of house, you should be employed, Abby, and be earning money. Not that sometimes you are talking to somebody who is not, the person will not even tell you that I'm not working or I don't have source of income. You just be spending your energy teaching on that person. So rising unemployment reduces housing affordability and demand. Higher income level increase mortgage eligibility and home ownership. So if you take, for example, any mortgage form, their conditions, they will look at your history, how much you have been earning in the past. They are all trying to do this to know that if they give you that mortgage facility, you'll be able to pay. And when somebody is not gainfully employed, it becomes very difficult. And even when somebody is working and the pay is not reasonable, it might be difficult to get mortgage. Do you understand? So that's what they mean by income level. Income level means how much the person is earning. Will the person be able to take care of his or her basic needs and then begin to pay for mortgage? So employment and income level is also a very, very important determining factor. Okay, government policies and physical environment. we are all aware, tax policies, land reforms, and mortgage regulation influence real estate performance. Government spending on infrastructure boosts accessibility and property value. Policy promoting affordable housing can expand market base. Fiscal instability discourage private investment. Do we understand all this? We know the implication of tax. We are all I think we did seminar on tax the other time. We know the implication of if government is taxing your income heavily, like they say is 20%. If they have taken 20% and you have to feed, it reduces your ability to invest or buy home. Do you understand? And yeah, change your God. That's under fiscal environment now. So government spending on infrastructure, we're all aware. Like since this present minister came on board, I mean, the roads infrastructures that they are putting in place is boosting housing affordability in Abuja, for example. What it means is that there are some areas developers could not access before. They are accessing it now, and they are building what? More houses. Do you understand me? Though other factors are still working against it, but at least it's opening up some areas. So policies promoting affordable housing, in my own opinion, if it comes to this affordable housing, government is still not doing enough. That is the truth. If you say you are building on your own housing estate, because at the end of the day, let me tell you people something. Government are not very good business people. Do you agree or not? So instead of saying, okay, you are building houses to make it more affordable, but what is the sustainability of this venture? Do you understand me? In my own opinion, the policy should have been put certain things in place so that private investors can come up with affordable housing. And what are these things you have to put in place? Make land acquisition very, very easy. Do you understand me? See how you control what, how the tax rate and building cost of building material. There's no control of anything. Everybody is just doing what he or she wants. And if you are talking of say, please, if you go out and somebody is telling you, say you want affordable house, just tell them we don't build affordable house. Please. I'm blunt on this. Please. We don't build affordable house. Because if you are talking, somebody is telling you today he wants a 2-bedroom flat for 40, 50 million. How? What is the cost of the land alone? And then if we buy cement at 10,600, how can we do affordable house? It's not possible. And this is why some, investors or home buyers fall into scammers. Please, as I told you before, you guys are what? Consultants. Use the opportunity of all this training we are having here to educate people. Do you understand? Because if you do all the maths correctly, you just find out that it is very, very difficult for developers, to come up with affordable housing. Do you understand me? And when we are talking of affordable housing, we are talking of houses that are really very, very cheap. Maybe between 20, 30 million have gotten 2-bedroom flat. Please, if you see where that one is available, tell me. Me too, I will go and buy. Okay. So fiscal instability discourages private investment. So when they are talking of fiscal instability, that is when, for example, this is CBN rate is jumping up and down. Do you understand me? So, and Nefisa mentioned something we didn't talk here. Also, the political environment. Do you understand me? From build up, even if you are following property online now, you understand me? Property values, especially land, is coming down. The politicians, they need money to lobby, Abi? So most of them, they are putting out their property for sale. Do you understand me? And they are also mopping money. That's why some things are a bit tight now. They are mopping money towards that election period. So, in my own opinion, for this period, property value will slow down. Do you understand me? Price of property will, slow down. But when it is very, very close to that election, when they are doing those, of course, some people will. And don't forget, how many people really will have access to that kind of free money that they are sharing? How many percentage of Nigerians will have money? So this is my own kind of opinion. Everybody, no correct answer to this, but in my own opinion, the property value will go down this year. Do you understand me? Because many of them, they are already putting up their properties for sale. Do you understand? And government also, they are not this year. You know another reason. This year, they are not going to spend so much on infrastructure. No governor want to do project, serious project this year. All their focus, even since last year, have been building up to the election period. Do you understand me? So it will, in my own opinion, it will slow down the prices of properties. So the fiscal environment, and of course also, there are concerns. What is going to happen? Any election year, there's always what? Concerns. What is going to happen? People are thinking, especially those who are risk averse, what will be the outcome of this election? Is the election going to come and go smoothly, or there will be crisis? Do you understand? Some people will rather put their money in their pocket or change it to dollars or whatever, instead of using it to buy property this period, because they are concerned about how the election will go. So you find out that when there is, very unstable political environment, it also affects property value. So foreign direct investment, FDI. FDI inflows into construction and housing sectors improve development capacity. Political stability and clear regulations attract foreign investment. Restrictions on capital repatriation discourage long-term commitments. I hope we understand what capital repatriation means. You bring your money from US or outside Nigeria to come and invest here, and when you want to take it out, there's restriction on how you can take it out. Do you understand me? That is what they mean by capital repatriation. You invested here, but if government policy is making it difficult for you to take your money out when you want, they will not come. Do you understand me? Everybody want to, invest where he can move his money easily. And let me draw you guys' attention to this, something about this FDI. Sometimes government are shouting, we are getting foreign direct investment. Those things they are, in my own opinion, some of the funds are not really foreign direct investment. Because foreign direct investment means they are the kind of foreign direct investment that will help us as a nation is that people are bringing money here to build industries. You understand me? Build factories that employ people. But most of our foreign direct investment are what? They are what they call carry traders. Do you know what carry trader mean? Okay. If, for example, now, a US interest rate on government bond is, for example, 4%, and Nigerian own, I think most of our bond are 2-digit, sometimes 12%, 15%. So international businessmen, they will take money from US, for example, and come and buy Nigerian treasury bill or federal government bond. That money doesn't help us. It doesn't help us much. Do you understand me? These people, they are looking for economies where their CBN rate is high. You understand? They just move their money. Once you change your rate, they move their money out. Do you understand? So the kind of foreign direct investment you are looking are people who are ready to invest in Nigeria for a long term. But what we are saying is that when the physical environment is not conducive, will anybody now, any foreigner now want to go and establish farm in Meduguri? So that is part of the things we are suffering. Do you understand? So when the environment is not stable or predictable or very hostile, security challenges are here, it is very, very difficult to attract real foreign direct investment that will help us. That somebody come and buy, bring 10 billion and put in Nigerian stock exchange. He's not doing anything. He's just on his computer monitoring. If the rate go up, he will sell and cash out. That one doesn't help us. It doesn't provide job for our people. Do you understand me? So there is still need for, government efforts to make sure that we attract real foreign direct investment that will help us as a country, not carry traders. Okay, population growth and urbanization. Nigerian population exists 220 million with over 50% urban residents. Rapid urbanization drives housing demand in major cities like Abuja, Lagos, and Port Harcourt. However, infrastructure and financing gaps limit supply response. We understand this clearly. Our growing population put pressure on what? Demand for houses, especially in urban areas. Everybody wants to live in the city. But when the infrastructure, enabling infrastructures are not there, it becomes difficult for those houses to be made available. Do you understand me? So, sustained inflation, inflation for over a long period of time can also slow down transaction volumes. We have discussed that briefly. So, this is why we are discussing that population growth, you understand me, is part of what? Demand drivers. Do you agree or not? Every blessed day, our population growth rate is really very, very high. You understand? And most of the people, 50% of our people, are living in urban areas. That's what we are trying to say. All these things put pressure on demand for houses. But why are the houses not, coming up like that? Infrastructural gap and financing. How do people? Because it's only mainly in this our climate that you want to buy a house. Somebody will say, this house is 300 million. Pay cash. Do you understand? In other developed climes, all you need to do is just like 10 or 20% of the house, cost of the house, and they will give you mortgage. You'll be paying gradually. Do you understand? So, but we are yet to get there. So here we compare, we want to look now at how inflation versus property value correlation. So historically, property appreciates faster than inflation in strong markets. Remember one of the training we had at the beginning where we, gave 10 reasons. We discussed 10 reasons why real estate is one of the best form of investment. And one of them is what? Is a store of value. If you don't want to, because sometimes we think that you are making money. But if you are not, any money you are getting and you are not factoring in inflation, you are not doing it right. Do you understand me? So, for example, if you have 150 million today, and next year, what you want to buy with that 150 million, you can no longer buy. It doesn't make sense. Or you do an investment that the return on the investment is below this our inflation rate. Do you understand me? So what we are basically saying here is this. This is one of the things you can also, and it's not that you are pitching clients for them to buy. Really, like if you go to stock market today now, to be all over the world, to be all unpredictable because of this crisis. Do you understand me? But you invested your money in property. After all this, it will still take its normal value in the market. So real estate is one of the best store of value. So investors use it as a store of value during inflationary periods. Sustained inflation, however, can slow transaction volumes. If it is prolonged, it will what? Slow how the volume of transaction that go on real estate. So some of these things you need to be very, very versatile with them. So challenges and risk. High construction costs due to inflation and imports, weak mortgage system and limited long-term financing. Policy inconsistency and insecurity affect investors' confidence. We have discussed this. Nobody wants to put his or her money where you are not sure that you can get it back, especially this insecurity. It's a major problem. Then infrastructure deficits limit property accessibility. When government are not putting infrastructures in place, it what? It limits how people can access property, because it is where there is road, there is water. That is where people can go and build houses. Developers can build houses there, and investors or home buyers will come and buy. But when there is no infrastructure, it becomes very, very difficult. Do you understand me? So government, if they are talking of, as I said before, if they are talking of affordable housing, they should be able to put the enabling infrastructure in place so that developers can develop properties, people can afford it. Okay, so strategic implication for stakeholders. Here we are looking at how it, affects everybody. For investors, diversify across region and property types. I hope when we are discussing this, we know who investors are. Investors are not necessarily home buyers in this sense. These are people, they just want to put their money here and make a return on their investment. They are not coming, if you build the house in Aso Rock, they are not coming to live there. They are, if you are discussing with a client whose aim is investment, anything you talk, what the person is interested in the numbers. You understand? So that sometimes if you are talking to that kind of person and you can't tell him or her what he will get in investment, you are just talking grammar. Tell him this property is the best, is close to presidential villa. The person is interested in what? In the numbers, return on investment. So then for developers, focus on cost efficiency and partnership. That's, you know, if you are a developer, this client, you have to try to be cost effective, because when things are going up and down, there are kind of houses you build, you will not be able to sell it because of the cost. And then policymakers, that's when we are talking of government now. Strengthen mortgage systems and incentives. There should be things, I think government should still do more on mortgage in this country for people to be able to, access mortgage and buy home. Then for home buyers, prioritize timing and long-term investment horizon. So you look at places that, you time the time you will buy, and you look at places that have potential for long-term return. Summary and key takeaways. Economic indicators are key determinants of real estate trends. Inflation, interest rate, GDP, and currency directly affect property value. Stable policies and infrastructure investment boost investors' confidence. Long-term resilience depends on diversification and sustainable financing. Do you understand me? So what they are basically saying here is, whether you are an investor, whether you are a developer, you try to diversify. And that is why for us, we didn't just focus on one type of property. We're doing both commercial and residential property. It's part of our game plan. Do you understand? Okay.
Dimark Homes Limited are leading real estate developers based in Abuja, Nigeria. We currently have ongoing development projects with high return on investment. Please visit our website, our social media handle, or contact us on the number displayed on the screen. Thank you for watching this video. We believe you have been positively impacted. Please subscribe, like, and share.